It's 8:48. Just a reminder that you can watch us on Facebook Live as well as listening to us on Radio 3. Money Talk on RTHK Radio 3 is our page. Gold hits record highs in a number of currencies this week, including the Japanese yen, the British pound and the Australian and Canadian dollars. And yesterday, as you heard earlier, the price of gold in US dollars surged above $1,500 an ounce for the first time since 2013. And year to date, gold is up 17%. To explain what's going on, I'm joined now by Joshua Rotbart, who is the founder and managing partner at J. Rotbart & Co. Good morning, Joshua.
Good morning, Peter.
Tell me a little bit about what's happening. Why are we seeing this surge in gold prices at the moment?
Well, gold is, I would say, an emotional commodity. It reflects investors' concerns about what's happening in the market. And when you look at the geopolitical landscape, at the financial concerns, the uncertainty, the choppiness of the market, investors run to gold as a safe haven. So it's not a surprise considering, again, trade war, currency war. We have tensions in the Gulf. We have negative yield debt and so on and so on. There's no wonder that gold shoots up. It shows that the investors are concerned. There's a lot of stress in the market.
We've seen in the past when we've had these gold rallies over the decades, you tend to get long periods where gold does nothing. And then when it does start to move up, it goes on these really big moves, doesn't it? Quite extended moves that can go on for a while.
Yeah, right. The last rally we had was 11 years rally. So, and then we had 6 years of sideways in terms of prices. So, yeah, you're right. And again, the reason, I think it's an emotional thing. So if you're concerned, if you're stressed out, you're gonna just do whatever you can do to save your money and protect your wealth. So we're seeing it in individual investors, but we see it also with central banks.
So do you see a similar rally this time? Although it's done well, it's up about 17%. I mean, could that be just the beginning of an even bigger one this time around?
Yeah, overall, we believe there's going to be a long period of appreciation in the price of gold. I don't think it's going to stay long time over the 1500. Obviously, there's going to be correction. Nothing goes up in a straight line. So we're going to be seeing some ups and downs. But overall, we're very bullish on gold. The conditions are there for price to appreciate.
And we've seen in several currencies, if you price gold in, say, British pounds, it's at a record high. Presumably that's because of things like Brexit and also the decline in the pound is making gold even more attractive.
Exactly. And we saw it, by the way, after Brexit. We see it now again. So it depends on the gold is denominated in US dollar. That's how it's traded. So when you put in the factor of the other currencies, then you have the concerns about those specific economies and how they are doing. So if you're concerned about the pound and how Brexit will unfold, then yes, then you'll see a record high in the price of in pounds denomination.
One of the things that we were talking about a bit earlier on the programme is we're seeing more and more central banks cut interest rates. We've got $13 trillion now of bonds around the world have a negative yield. Presumably that makes gold even more attractive, doesn't it? When you've got yields now in sort of like we saw in the German Bund, minus 60 basis points earlier on today. Gold, which has no yield at all, looks good.
Yeah, exactly. Gold is a currency. It's a currency, it's a commodity. So when you have nowhere else to go, you go to gold because gold beats inflation. Gold performs very well in the long term. So if you look in the last, let's say, 10 years, gold has been doing an average appreciate 6% a year. So it's true it doesn't give you yield, but it does beat inflation.
Yeah.
Now, it's interesting to see what central banks are doing on the other side, because for us, the story about gold is, of course, the rally in the price, that's one thing. But what central banks are doing with gold and how much gold they've been buying, that's another story that has been very interesting in the gold market. We've been seeing central banks buying in an accelerated pace, and not the usual suspects, I would say, which is China and Russia and Turkey and Kazakhstan. We saw 20 banks bought gold in the last 6 months, and in 2018, the highest since 1971. So on the one hand, you see the negative yield bond, and on the other hand, you see banks are holding gold, actually.
And why are they doing that? Is it because they want to diversify? Because presumably, if you keep on buying US Treasuries, which is what a lot of central banks invest in, I mean, they've shot up as well. They're looking very overbought and yields are very low. Is that because they just want to diversify into other things and there's not many other things they can diversify into?
Exactly. So diversification is one thing, and it's proven gold is a good diversifier in a portfolio for individual investors and for banks. So diversification is one aspect. The second aspect is a political one. It's a de-dollarization of countries like China and Russia. they look at the again, they look at the geopolitical landscape, and they want to de-dollarize their economies. Russia actually is doing, I would say, a very good job in dumping the U.S. treasuries and moving to other currencies, gold, euros, renminbi. We just read they're almost trading more euros than US dollar these days. So it's a political thing also. They want to stay away from the dollar. They want to be able to, as we move to a multipolar currency system, they want to move away. They want to have other options. And the third thing is as part of their financial security. Poland, and I would say unlikely candidate to be holding gold, has bought a lot of gold the last few months and last year. And the central bank that said we are concerned about the financial security of the country. So, even though today, with all the development in the economies and so on, your currency is as good as the gold you have in the vault to support it.
And is there a sense also that they talk about their financial security? Presumably countries like China, like Russia, like Poland don't want to depend upon the US really for be tied into its monetary policy as it is at the moment. But also, is there a sense that maybe that the dollar is being devalued? The US would like to devalue the dollar, and that's making people more concerned?
Yes, so that's a diversification element. So they're looking at they think the dollar is weakening, and then we need to. And traditionally, when the dollar is weakening, the gold is doing well. So again, it's the negative correlation that gold is good at that makes central banks want to buy more gold.
And are there people that would like to see the demise of the US dollar as the reserve currency? I mean, it is already, to a certain extent, becoming less important in the global financial system, but still by far the dominant one. But you do get the feeling, don't you, that China and Russia would love to see the end of the US dollar as the reserve currency?
Of course, they would like to. They would like that, and I think that, and we saw an increase in the price of gold. I think at one point when Trump threatened Mexico with tariffs, but due to the illegal immigrants problem, so countries looking at it and they say, okay, if they're using the dollar not only for financial, I would say not on financial war, but also for political war, we need to be careful. We need to detach ourselves and have other options. And again, gold is a currency. So, but if you saw in Turkey when the Turkish lira appreciated, the government told the citizens, bring the gold back home. You saw when Iran couldn't trade with anyone, they traded with Turkey in gold. And we saw now when Venezuela had to pay the bill to Russia, a Russian plane landed in Caracas and took the gold from the central bank in Venezuela. So it is a hard currency, it's an alternative to dollar.
And China itself, they're of course also a big buyer of gold as well at the moment, aren't they? They presumably want to internationalize the renminbi more as well. What are they doing?
So China has been buying gold for 7 consecutive months, and they've been buying a lot of gold. We know from people in the industry that the Chinese government bought a huge vault in Beijing that can accommodate trillions of dollars worth of gold. So they definitely are buying gold as part of the internationalization and as part again of the de-dollarization. And we believe they will buy more because if you look at the how much gold is part of, let's say, the U.S. Foreign reserve, it's almost 75%. China gold component is only 2.5 or 2.8% of China's foreign reserves. So there's still a lot to go. So China will continue to buy gold as we go along.
Now, if you're probably convincing some people to go out and buy gold, there's a number of different ways in which you can do it, aren't there? I mean, you could go and buy gold itself, physical gold. You could go and buy gold mining stocks. You could go and buy maybe some ETFs. What would you recommend as being the best way of having an exposure to gold?
Well, we're a physical bullion house. So of course, we preach and preach to use physical gold. And the reason are the ETFs are good for short-term trading. If you want to enjoy the volatility in the market, that's fine. But from a security point of view, ETFs are not backed with real gold. Plus, your ability to redeem and take your money out and cash out in times of crisis is limited because it's a financial product. So having a hard, tangible asset with no counterparty risk is the preferred way that we see it on the medium to long term to be exposed to gold.
But if you're going to do that, you've got to think about how you store it and the security of it. What should you do?
Well, you need to come to specialist companies like us and others that can they can handle this for you. But you're right. I mean, what we see is especially we treat mostly our clients are mostly wealthy clients. They will keep some gold in their home for, I would say, a doomsday scenario. But the majority of it will be stored in a private vault, either in Singapore or in Hong Kong or in Switzerland, when they have access to it at any point.
And you have to be a bit careful there because you do hear some horror stories as well about gold going missing, don't you, from vaults? And so, I mean...
Yeah, you need to go to a service provider that offer insurance coverage. You need to go to good jurisdictions. There was even if you saw 2 days ago in Mexico from one of the mints there was a $2 million worth of gold being stolen. So go to safe places like Hong Kong, Singapore, Switzerland. We see American clients repatriating their gold to the US because it's relatively safe, and use companies that offer insurance coverage. At the end of the day, in terms of the counterparty risk, it's still better to use a good physical bullion company than to buy ETF.
Okay, well, thank you very much for coming in, Joshua, this morning. Good to talk to you, and a very interesting topic.
Thank you very much.
That's Joshua Rotbart, who is founder and managing partner at J. Rotbart & Co.
You're listening to Money Talk.